Chart Pattern Example Case Study 102, ZNGA. A double top range is defined by the high of a bearish star on February 3rd and the high or the close of the candle on February 14th. The lower boundary is wider to factor in the bullish spike and minor gap up on February 2nd, along with the IPO price in close proximity. Since this is a compact double top with no clear swing points, a line chart with closing prices doesn't outline it that well. However, it does still demonstrate price action is neatly contained within the pattern outline. The double top has failed, but after a new high was reached, a triple top is now possible. Following the minor downswing from February 21st and 22nd, some helpful downtrend lines can be drawn, as the spread-out triple top range is likely to succeed. A strong close under the lower boundary would not be out of the ordinary. As the downtrend develops, a head and shoulders outline is more easily identified, though even if it wasn't identified in development during March, the support range near the IPO price would have been considered as an obstacle. This is true even though bearish volume was building up on the 1150 level to start April, while bullish volume had virtually disappeared. As usual, it would be necessary to wait for conclusive bearish developments, especially from a support range around the IPO price. Price action is neatly contained within all the bearish reversal pattern outlines, and selling volume remains constant and high into July for a stable downtrend. After the gap down, there is a rapid change, with more bullish price action and volume. The wider gap down range turns into an exceptional case of a failed flat bottom. This case is less of a shock given the broader context of the established downtrend. Bullish sentiment was not lost as the gap down also starts with neutral to bullish price action when the next downtrend line is broken. Resistance was normal given the old 268 level and the gap fill. However, by the 2013 New Year, there was a noticeable return to increased bullish volume along with a noticeable incline. It was in fact an ascending triangle that continued the bullish sentiment of the double bottom. This was an ideal foundation for a strong bullish recovery. The gap fill and triangle's upper boundary provided firm support to sustain ZNGA back up after the uptrend line was breached in mid-2013. Such rapid movements are quite normal for this chart, especially after such a bearish IPO had taken price to sub-$10 prices. Adding lower uptrend lines is helpful after more bearish volatility takes place. After the recovery is halted, there are similarities to the very first double top. This one is also compact and has an extended lower boundary. Even though the ascending triangle fails, bullish sentiment remains as the gap down immediately starts being filled. The 220 level neatly defines a wide double bottom. It is a passive rise with constant but low bullish volume after selling volume decreased following the gap down. Similar to other examples, heavy selling in the larger downtrend after the gap down points to bearish overextension. April essentially had the same situation as February after the compact triple top and gap down, except this time there was a bullish spike and even weaker selling volume. This produced perfect bullish conditions to fill in the gap and pass 281. The 220 area remains quite influential before and after new lows are established. Volatile price action is still a prevalent feature on the chart even years after the IPO, because the stock is still in the sub-$10 range. Lower priced stocks like this generally have more rapid fluctuations even after a long-term recovery begins. old levels from chart patterns are still useful in identifying support and resistance, but they won't be precise all the time. When support holds at 340, a compact double bottom lays the foundation for a steady bullish phase in the wider range. Now attention will be focused on the possibility of a triple top. If it wasn't apparent in March 2019, a long-term view reveals a clear incline was established. This led to a more aggressive bullish continuation and presents an upward channel similar to 2017. The bearish spike in August combines with an inclined double top to produce a spread out triple top that is accelerated into the firm 585 to 545 range by 3 methods falling price action. Despite selling volume remaining, there is greater support potential from the old uptrend lines intersecting to precisely mark a compact triple bottom. Similar to previous years, price action is neatly contained within the reversal ranges, and trend lines are breached quite quickly due to persistent bearish volatility. This is often a result of short-term profit-taking and speculation that is more common with lower-priced stocks like this. Similar to 2018, here is a brief horizontal range defined by contrasting bullish and bearish patterns. This is also a good example of how price action can still be contained in a relatively precise ranges, even on a naturally more volatile chart like this. As the larger uptrend continues, a failed double top presents an incline. The result was a gradual buildup of bullish strength, leading up to the bullish surge towards June. Interestingly, the approximate incline matches the pair of old uptrend lines. Once again, the old uptrend lines remain quite useful as they converge to mark a bullish reversal countering the large double top. The compact triple bottom is more easily defined on a line chart with closing prices, and the double top more easily identified with a candle chart. This highlights the importance of using various chart formats and being familiar with general price action outlines from candle patterns as they relate to chart patterns. Incidentally, there is another triple bottom around the 830 area, though the more interesting formation is the bearish abandoned baby candle on November 4th, with characteristic gaps before and after it. This forms a sharp peak for a bearish acceleration. It could also be said it completed a flat top range. The sharp double top in early 2021 is similar to previous instances of a double top where the lower boundary is expanded due to the close proximity of an IPO range.